Hey folks, it's Ray with Taste Radio. Right now, I am honored to be sitting down with Gabriela Morales, who is the managing partner of Ignite20. Gabriela, great to see you.
Hello, thank you. Thank you for having me here.
Yeah, we are here in Anaheim for Natural Products Expo West 2025. You told me before we hopped on the mics, this is your first Expo West.
Yes, and I'm so excited. Just like a few minutes ago, I just walked a little bit. I mean, it's not open yet, let's say, but yes, I'm like so excited. I can't wait.
Yeah, you're not ready, I don't think, to see about 80,000 people
Yes,
in
this is
three major halls, but yeah, it's an experience for sure.
yes, and I'm ready for it. This is what everyone had told me. Like, anything you imagine, it's like 10 times that. So
Absolutely. That is a very good explanation of what Expo West is like for a first timer. You've been in this business, that of CPG, for some time. And when I heard about Ignite20, I said to myself, I need to talk to Gabriela because this is a fund that a lot of people would be interested in, a lot of people want to hear about, and hence we are sitting down here in the press room at Expo West. Talk a bit about your background in the industry and the origins of Ignite20.
okay, yeah. So actually, I'm a nutritionist. So it's been a long time. I've been very interested in the wellness space, and I'm a former founder. So I first started with a healthy food restaurant back in Mexico, with this is where I had the first experience with the CPG industry. Let's say, with cold pressed juices, superfoods, and so on, and let's say like looking back forward a few years ago, then Redwood Ventures, which is a group of different funds from Mexico as well, started Santatera Capital, which so this is how the stories are going to align.
And
And
Santatera Capital, they've invested in a bunch of brands that folks might be familiar with, including.
yes, exactly. Like, for example, Hayo, Little Sesame, Wild Wonder, Mezcla. One of our later investment is Refresh Gum, for example. So yes, but actually Santa Terra is investing in later stages, like Series A plus, leading rounds. But throughout these years, at Santa Terra, we have realized that they were like some amazing founders, but they were not there yet. Let's say it's just a matter of time, but they are like very cool startups. And so we say, hey, why don't we start like a new fund, like the newest fund, leveraging all of the experience, the network, and everything that we already know from Santa Terra, but for early stage, because there are not so many funds for early stage. But of course, even me being a former founder, we know how hard it is. When you start, you don't have the network, you don't know anything. And of course, you make a lot of mistakes, right? So, I mean, it's hard. So, but what if someone can help you and introduce you to the right people and just like get a little bit of a guidance, right? And of course, it's even more if they can trust your product and your company to a level that they put money in it. You know, so we really are going to have skin in the game, as we often say, and yeah, I mean, this is kind of like the, let's say, like the first step, because later, of course, we are going to look, some of these amazing founders that we are going to look for can also, when they grow to Series A and plus, be invested by Santa Terra, right? So this is like kind of closing the loop in the industry, where we really want to help founders and grow great companies.
What really interested me about what I heard about Ignite20 is that it's not one or two businesses that you're looking to invest in. It's a lot of them. It's about 50 plus, if I'm not mistaken, which is amazing because when I think about incubators and I think about early stage financiers, it's sort of one here, one there. But you're working with or plan to work with a broad range of companies. How do you evaluate which companies to invest in? How do you look at what is the criteria for investment?
Okay, so let's say like the criteria. I will answer this question in two parts. The first one is the criteria in paper, let's say, is whether they need to be in the industry of health, wellness, food and beverage, pet, and beauty. So you first need to be in one of these five categories. better for you or have a healthy ingredient or so, and be early stage. What does it mean early stage? From 100,000 to 1 million. This is, let's
In,
say,
in revenue.
yes, in revenue. Yes, this is our sweet spot. Okay, so this is the in paper, let's say, part. But the other one is, as we are in the early stage, let's say there is a component that is really important, which is the founders, right? So we really are looking for an engaged team, like a hustler team, right? Because at the end of the day, start a business, it's like really hard. You need to be really resilient, and we really want to look for these people that will have this fire in the belly, that they really want to solve something through a product and go for it, and we really want to help them there. So this is like in theory, but also we are looking for the right people.
Certainly, the founder is an important component, perhaps the most important component to a brand's potential success. But solving the problem, as you pointed out, finding a problem that you can solve with a product or a brand isn't necessarily the easiest thing to do. People have been trying to do it forever. And yes, sometimes there is white space. Sometimes there is a true problem that can be solved by a new innovative brand. But how do you define white space? How do you identify whether or not a problem is truly there to be solved?
Okay, it depends. What a great question. It depends also in the, let's say, in the industry that they are in it. For example, I would just, for example, we have realized that we care more and more about health, right? So I'm just mentioning one example. So there are a lot of people, a lot of brands like building like high protein. So let's say high protein, it's a tendency, right? So we are looking for tendency and trends because it makes sense. Because the more you age, and this is where I'm gonna be a little bit of my nutritionist side. So the more you age, the less protein you will have, and there is correlation between how many percentage of muscle you have in your body on how early you develop a certain illness that you will maybe have in your genes, right? So this is a trend that is going on, but it makes sense, right? So if there is like two bars or two, I don't know, like coffees or whatever, and one has highest protein and is going there, and the other one is just like less sugar or something, okay, so we're going to go to that trend, right? So yes, because there's also a side of business in that sense. So the people, they will have more success if you are going to a market which is growing. So this is also very important to go on that wave that will be there.
So it sounds like functionality is critical to your investment strategy.
Yes, exactly, 100%.
Yeah. So I was reading, and just back to the number of companies you're investing in, the goal is to invest in 60, if I'm not mistaken, companies over a 3-year period, 20 each year, and giving $50,000 to each brand or each business as a startup, as some startup money.
Yes, exactly. Yes, we're looking into that, but actually, there might be some, let's say, kind of surprises that I cannot reveal yet.
Okay.
But they can be a little bit more in that sense. So those
A little bit more money.
yes, that those numbers can just slightly change. But yes, of course, because we're really seeing potential in this project. So yes.
I've always advocated for funds, whatever size they are, or in corporations, venture capital arms, to invest smaller amounts in a larger number of companies. Sometimes I think that's like you're shooting darts at a dartboard and hoping one of them hits. But is that part of your thesis here? Is that, yes, we're going to invest in a bunch of companies. Some of them may not make it, but we're hoping that a percentage of them might actually build successful brands. Is that kind of the mindset here?
Yes, 100%. Like, let's say in the vision of an investment side, yes, this is more strategic in that sense, because they'll say, it says, and if you see the stats, so if you have more investments, and even if it's a smaller side, let's say, there's more probability, like 5 or 10 from them will rise, and this is why we are there for. So if we do things right and we help them from pricing strategies, from commands, from I mean all of these tactics themselves, and of course with money, so we see like, hey, we're decreasing the risk in that sense. So yes, it's really strategic in that sense.
Value-added investment is something that funds and financiers always talk about. Oh, we're bringing something else more than just money. But in the case of Ignite20, you are truly a value-added investor in that there's more than just the initial investment. Talk about what else you're bringing to the table for brands that you're investing in.
Yes, 100%. And actually, this is, to be honest, this is just replicating what we have been doing at Redwood as a group. For example, Santatera, we have some in the funds where how it typically works. What the funds have investors, right? Call it LPs or limited partners, and let's just to mention, like, some of our limited partners are already helping our brands in Santa Terra, right? Because we are from the same industry, so we really want to make connections beyond the money. So yes, it's already happening in Santa Terra. This will not be the exception at Ignite20.
How do brands put the best foot forward? How do they apply in a way that is going to attract your attention, get you interested, get you wanting to get in touch with their founders?
Okay, so yeah, I love this question, and actually something that I have to say that it has worked for me in the past as a founder, and I have seen just one startup that made it. Is like sending an email, but with a video. Right, with a video, just like 20 seconds recorded, like, hey, my name is Gabriela, I'm the founder of Ignite, and my product is this and this. But because it's like creating like a TikTok, if you
Yeah.
want to, but it's why TikTok had became like, of course, the algorithm and so on, but it's also because our human brain gaps more when it's visualizing, right, rather than reading. So it is also very important, for example, when you get to try or make an intro to an investor, how you do it. It's just not your product, it's also how you do it, right? So for example, just sending an email, my email is Gabriela at Ignite20.com. I will be very happy to receive a lot of videos. For example, just recording, it doesn't have to be really like professional. Just with your phone, just like, hey, my name is this, and this is my company. This is like how we've been growing. Our target for this year is so and so. So this is just like 20, 30 seconds. But you stand out from the crowd. Second, you give a little bit of a sneak peek, so you get attention from the potential investor, and third, let's say you as an investor, you kind of read the energy and the enthusiasm in just like seeing a person, right? So for example, this is a good way that you can like get to get the attention of someone. And for example, this is another thing that we are going to have at Ignite. We are focusing on distribution, on like a crash course of CPGs, but also we are really focusing on, we're calling it Founder One-on-One, how to be a better founder, how to be a better leader, how to address investors, because there are some soft skills that sometimes we need to know, right? And we don't know what we don't know. And being in the other side now as an investor, you can like, hey, do this and this will work better. Like, don't write a 10 lines paragraph, just like 2 lines, very concise. It's not on you, but sometimes people doesn't have a lot of time. Just send a video and so on. So
Just wet the palate, get them interested.
Exactly. So for example, if they want to start like reaching out, which I will be very happy, just like send a video, right? And just like that. And this is one of the things that we really want to have the founders to thrive.
That is so refreshing to hear that you want people to email you, Gabriela at Ignite20.com.
I'd love to.
Okay, there you go. Well, hopefully you're going to be hearing
Come
from a lot
on.
of folks. There you go.
Reach out, please.
Now, again, there's another application process beyond that as well.
Of course.
But I think in that initial email, in that application as well, realism is really important. A lot of times I will see an initial pitch, and the founder will be talking about the market potential. Certainly, early stage angel investors want to hear about how big the brand could potentially be. But if you start out by saying, hey, we're going to take a big piece of this $3 billion X category, I tune out. I'm not an investor, but I end up tuning out. Is that something that kind of doesn't work for you either?
Yes, yes, because I would say it's important to mention it. But for example, one thing that I've already had like a few interviews with some founders, but sometimes I've seen they take like 3, 4 slides just talking about the market. You
Right.
know, it's like yeah, that yes. This is a huge opportunity, but I wanna know about you.
Right.
Like, why will you stand out? You
Mm-hmm.
know. So yes, 100%, exactly.
I know you are looking at a lot of categories. I know that you're looking at a lot of interesting ingredients that can help brands stand out. But I'd love to get your perspective on specific categories and perhaps specific ingredients, if I may, and just get a general sense of how you feel about them, if I may.
Oh yes, of course.
Okay.
So
I'll ask, and let's see how you respond. So, I've heard this is interesting because I've heard mixed feelings on this particular category, even though it is one of growth, which is better for you soda.
oh okay, yes.
How do you feel about better for you soda?
Okay, so let's say, this is just my humble opinion, okay? But sometimes when everyone hears about a specific category, in a, it's maybe because it's kind of too late. You know what I mean? So it's better to start when it's rising. Let's say one ingredient, as you, it's not an ingredient, but it's like a pre-hormone precursor, but like GLP-1, right? So this it's more of the rise than better for you soda. So because better for you soda is so established, even at Walmart, you already have like a soda, modern soda shelf. Especially, you have all of these amazing brands, right? And there are coming more brands, but it's. Let's say we don't want to, for example, at Santatera, we already have one example, we have Hayo, which it's an amazing brand, right? But they have started like a few years back. So if you are just starting or thinking of starting, it's maybe too late. I mean, just take it. We say it in Spanish in Mexico, like with a grain of salt.
Yeah.
So just take it. My advice is a grain of salt. I'm not meaning don't start a healthy soda brand.
No, I think
But
you make a really good point here, which is that maybe it is a little too late to think that you are going to be able to compete with some of the brands that are already established out there, unless you have significant financial capital or not a humongous,
former
but
founder
or a strategic partner that can help you scale
Exactly.
quickly. Adaptogens. We've seen
Yes.
adaptogens incorporated into all kinds of food and beverages. I think there's still a misunderstanding or a lack of education among most Americans about what adaptogens are, what they do. How do you feel about adaptogens, just in a general sense?
Yeah, I believe, yeah, I agree with you. There's like, let's say like a cloudy, let's say, like a yeah, we don't really know how to categorize this. So sometimes it's like, hey, they can like energize you. Hey, they can help you sleep. Hey, they can, I don't know, like help you get less anxious. So yes, I just would be very specific. I mean, if you, as a founder, if you want to go into this category, I would start just like in a very niche market, for example. So, hey, helping to decrease depression to Gen Z, to teenagers, right? So this is very niche,
Yeah.
specific, with this one or two ingredient. It's just not like, hey, like taking the same example, healthy soda with a lot of nootropics, because it's like, hey, yes, but for who,
Yeah.
So, for example, this is one of the master classes that we have, like on, but this is in a sense of branding, right?
Hmm.
Like it matters what your storytelling is. So yeah, it's kind of yes, it's something to talk about it like longer.
For sure. Another ingredient, I guess, category that a lot of folks have interest in are non-nutritive sweeteners, things like stevia, monk fruit, erythritol. There's still a great amount of education that needs to be done among everyday Americans about why they should be consuming these things, and there's certainly a lot of information out there about why people should not be. How is, as a investor, as a potential advisor, would you talk to founders about incorporating those ingredients into their products?
Just on research a lot on past, present, but also future. Because it's like a few years ago, like I don't know, like 10 years ago, one of the today sweeteners that are like the worst were like the best. So
Right.
just like research a lot. And at the end of the day, they are also a business. So it's like more strategic if you add a sweetener that it's in the rice. So it's a mix having the great product, but also on being in the market, on the trend. I mean, this is also really important.
You mentioned protein earlier. It feels like protein is in everything. You can find protein in beverages, you can find protein in snacks, you can find it in pasta nowadays. Is there a particular category where you think protein? Is there a particular category where you think,
Pasta.
yeah, right?
Kidding.
Is there a particular category where you think protein can have a breakout potential, can really help a brand differentiate itself within that specific category?
Yes, I would say two. It's snacks and it's like salty.
Salty snacks?
Yes, exactly. Yes, because we already have seen a lot of protein bars, a lot of protein beverage, like from many years ago. But right now, like I don't know, like pretzels or like any other salty snacks, is going to be more in the trend.
The last thing I want to ask you about isn't necessarily a category or an ingredient. It's really about price. I see a lot of early stage concepts where, yes, the price is going to be high because they're not able to source ingredients at a broad scale. They're not able to get their costs of goods down to a place where they can get a price point that is, I guess, reasonable for everyday Americans at mainstream retailers. How does price influence, or how does price point influence your perspective as an investor?
It is very important, but I would say more than price, or let's say beyond pricing, is margins.
Sure.
Because you can have like the best product at $1, which is like cheap, but if you have like 5% of margin, it doesn't work. But instead, if you have, let's say, another startup that it's at $2 price, which is like 100% X, like the difference, but it's having better margins, that will be like in a perspective of an investor, right? That will be like not a no-brainer. There's like more variables you take in account, but you will go for the one that has better margins. And of course, we understand at the beginning you don't have the best margins because of how much you are producing. But for example, if you already have a plan to reduce it, that would be more. Not to reduce it, to better your margins and reducing the cost. That will be something that we will look for it. So answering to your question, yes, beyond pricing, that will be the margins.
Whenever someone talks about margins, they talk about profitability, and
Yeah, exactly.
profitability is certainly the buzzword of the last few years for investors. But if you're an early stage brand, profitability.
Sustainable growth.
Yeah, sustainable growth.
Exactly.
Is that the new term? Sustainable growth. Okay.
Sustainable growth
All
after
right.
2021.
Okay.
I'm
so,
kidding.
So 2025 is the year of sustainable growth. I get it. Okay.
I'm kidding.
Well, no. Well, with profitability, velocity is really important as well. I think both those things, you have to have a long-term perspective. But at what point does a founder need to think about one versus the other? At what point is velocity the most important factor in their building their businesses versus profitability?
All the time.
Just
Yes, it's just like it's like having too many like balls on your court, like when you are just playing pickleball or paddle or, like all
Yeah.
these racket sports that everyone is playing right now. Me too. And yes, both are very important. So it's just like trying to measure of everything. So yes, I wouldn't. Yes, I don't want to say like one is like something that you have to put more focus than the other one. Both.
Okay.
Yes,
It's difficult to be a founder.
it
It's
is. It
difficult to try to
is.
figure your way through this industry, but it certainly helps when you have a good partner like an Ignite20. And I am so excited, as I mentioned at the top of our conversation, that you're in this business, that you're working with founders that need money, but even more so, they need help with scaling their businesses. They need that value add as well. Thank you so much, Gabriella, for sitting down and speaking with me today. I really feel like a lot of our listeners are going to get in touch with you and want to chat with you. And I really,
Please,
yes,
please do.
and I really hope to see those folks as part of your portfolio in the years to come.
Yes, thank you. Thank you for having me here. I'm very happy. And yes, please reach out.
Definitely.